Thanks so much for joining us today. I'm here with Brad Jones, who is the Retail Banking Leader for Equifax. Brad, can you start off by telling us how that strategic vertical fits into the overall growth strategy for Equifax as a company?
Absolutely. So we created the retail banking vertical about 2 years ago. And a lot of bankers would probably scratch their head and say, well, I thought you served retail banks already. And we do. For over 100 years, we've served the credit needs of most financial institutions in the United States. But what we really wanted to do is more holistically serve that line of business. And so our mission is to help financial institutions attract, grow, and retain profitable households. The cornerstone of every household is the checking account. So we bring all of our capabilities, risk, fraud, and compliance to bear on the checking account so that they're more efficient and that financial institutions just have better success. But it's not just about the checking account, it's also about everything that comes off the checking account. So all the cross-sell and upsell that creates that profitable household. So for us, it just enabled Equifax to more holistically serve our financial institution customers.
Brad, it seems like every day there's a new rule, regulation being handed down by Washington, D.C. Plus the economy is so sluggish still. What are some things that financial institutions and banks are doing to overcome these hurdles and still grow and be profitable?
Yeah. Well, no stone is left unturned, right? I mean, everything's back on the table. When you just look at the customer life cycle, let's start at prospecting. New data is being used to help financial institutions have the best chance for success. They're trying to understand who is the customer. Are they in market? If so, what are their needs? And what's the best product my financial institution can offer to achieve success? Let's say that works and they get them in the door. It doesn't stop there. New data and technology is being used to assess and identify the potential of that household and then capture it, right? So the traditional pre-screen is being replaced by a very comprehensive cross-sell. You look at deposits, consumer lending, investments, small business. So how can you capture the most possible potential right there at the point of sale, the point of application? And then finally, when it comes to customer lifecycle management, leveraging internal and external data to identify trends. Where is this consumer going? What are their potential future needs? And how can I address them now to stay relevant, potentially become a primary household or maintain or strengthen the primary household that already exists?
Brad, it seems like customer centricity is top of mind for everyone these days. What are some best practices you're seeing around that?
Well, I think the Consumer Financial Protection Bureau is a big reason for that, right? So when they come in, they look at every process, every product, and they're thinking about it through the consumer lens. And so financial institutions are having to really retrench and enhance or elevate the consumer in their own organization. It used to be, I mean, I've managed product for a long time, and we would design a new product and we would do all the work, all the strategy, and at the very end, we would bring the consumer in to see how they felt about it. Now that's changed. The consumer has a seat at the table when the strategy is being developed. And so all that does is it elevates the need and importance for consumer insights and preferences. And so the best practices we see in the market as it relates to customer centricity is really around data, gathering more and better data to better understand the customer, their needs, their desires, their preferences, so that they can be used in the strategy development.
Big data, big buzzwords these days.
Yeah.
How are companies like Equifax taking big data and turning that into big revenue?
Yeah. So when I talk to financial institutions about big data, they roll their eyes. I'm starting to roll my eyes. But big data, I mean, what they probably wouldn't, what they don't realize is they're using big data today. It may not be the unstructured data that everyone thinks about when they think big data, but they have a lot of data and they're using it to make very important decisions. I think what's scary about big data is that those large unstructured data sets and then maybe those tools that are supposed to give you the answer. It's hard to dedicate resources to a process like that when you have to make money today. And so some of the best practices we're seeing is really starting with the end in mind. What's the question you're trying to answer? So let's just start with the question. Then let's identify the relevant data sources that can answer that question. And then once you get those tangible insights, those nuggets in the data, how do you make them actionable? And that's really where technology and analytics come into play. You may want to enhance your segmentation, or you may want to create a score that could be used real time at the point of sale. So big data, I think for a lot of folks is scary because it's big. It's really about distilling it down and making it actionable.
What is segmentation and how are financial institutions and retail banks putting that into practice?
Yeah. Segmentation's always been important for financial institutions, but you've really seen, well, along with the trend in customer centricity, big enhancements in segmentation, and it's leveraging big data. So when you think about traditional segmentation methods, it's really point in time. Who is the consumer today? What are their needs right now? Big data and some of the new analytic tools we have, we can start to understand the trajectory of that consumer. What's the financial path that they're on, positive or negative? And when you know that, your segmentation can become much more predictive and provide products and solutions today that are relevant for their future needs. So what we're seeing is really an enhancement to segmentation, leveraging data again and analytics so that it becomes much more powerful, much more predictive than the traditional methods that are used today.
Well, as an ever-changing, evolving industry, we look forward to hearing more from you, and we'll keep an eye on the retail banking vertical. Thank you so much for joining us today.
Yeah, thank you.